Assalamualaikum and good evening to everyone. So today my group is going to present and analyze the financial performance of hospitality and tourism related firm for Impiana Hotel and Shangri-La Hotel Kuala Lumpur. My name is Rafia Aiman. As the first presenter, I will introduce the introduction for Hotel Shangri-La and Hotel Impiana. Shangri-La is formed by Kwok brothers that was began in tiny family company trading rice, sugar and wet flour in Johor Bahru, Malaysia. Kwok Singapore was created in 1953 as a part of the company market penetration and market development, while Carry Holding was established in Hong Kong in 1974. Over 70 years, the Kwok Group has developed into one of Asia's most active global businesses, with activities covering multiple continents in industry ranging from transportation and marine to real estate and hotel. Vision for the Shangri-La Hotel is to be the first choice for guests, colleagues, shareholder, and business partner. And the mission are to delight our guests every time with our Asian hospitality by delivering consistent quality and value and creating engaging experience that comes straight from our hearts. To create a working environment that motivates our colleagues to excel and to achieve their personal and career goals, and to make them feel involved and valued. Also, to care for and enrich the quality of life of the communities in which we operate. While Impiana Hotel has been active in the hotel sector for a considerable amount of this time at this point, this hotel belongs to a group that is comprised of 5 different companies, and as a result, it has location not only in Malaysia but also in Thailand and Indonesia. Because they are such a prosperous business at the moment, it is not surprising that Biome Osmo Berhad decide to not only purchase them and incorporate their operation into their own, but also to change their name from Bio Osmo Berhad to Impiana Hotel Berhad. The vision of Impiana Hotel Berhad is to be recognized locally, regionally, and internationally as one of the most effectively managed hospitality groups. This will be accomplished by ensuring that all employees, from management to frontline workers, make it a priority to always provide customers with the highest possible level of service and in any environment. And the mission are to be unwaveringly committed to giving new and returning guests excellent services and experiences that go above and beyond what they expect from them. Recognizing and honoring their workers from their work and contribution, also making sure their shareholders get fair and reasonable return, and being a responsible, conscientious, trustworthy and reliable business person. So I will pass to the next presenter.
Assalamualaikum warahmatullahi wabarakatuh. My name is Aisyah Shamimi binti Muhammad Asmadi. Today, I will explain the next slide about issue or challenge that both of these companies face, which are Shangri-La and Impiana hotels. Both of the hotels occurred net profit decline during COVID outbreak. As we know, many of the hotels are affected by a pandemic situation when the company loses tourists as their main income for this industry. Due to of COVID-19 outbreak, both of the hotel business has poor operating result and take prompt action to lessen the impact of declining revenue by enforcing strict cost control. For example, delaying all non-essential capital expenditure, bolstering liquidity, and maintaining adequate banking facilities. So, we choose 3 ratios to make a financial analysis for both of the company. First, liquidity ratio. There are 6 components under liquidity ratio. Firstly, current ratio. The formula for current ratio is current asset divide current liability. By looking at this table, for every RM1 ringgit current liability, Impiana Hotel can only cover RM 78 cents for current asset to settle current liabilities. Meanwhile, for every RM1 ringgit current liability, Shangri-La Hotel has 62 cents for current asset to settle current liabilities. So Impiana Hotels has a better performance than Shangri-La Hotel. This is because Impiana Hotel can pay their debt, which is higher than Shangri-La Hotel. In addition, both of the companies still not able to cover liability since it is not reached RM1 ringgit for current liability. Next, quick ratio. The formula for quick ratio is cash plus account receivable plus marketable securities divide current liabilities. Based on this table, for every RM1 ringgit current liability, Shangri-La Hotel has RM61 quick asset to settle current liabilities, and for every RM1 ringgit current liability, Impiana Hotel also has RM41 quick asset to settle current liabilities. As a result, Shangri-La has a better ratio for company to encounter their liabilities compared to Impiana Hotel. It is because Shangri-La can cover liability which is better than Impiana Hotel. However, both of the company did not have a good quick ratio because it could not fully cover RM1 ringgit of current liabilities. Then, cash ratio. The formula is cash divide current liabilities. For every RM1 ringgit current liability, Impiana Hotel has RM8 ringgit 71 cash to settle current liabilities, and for every RM1 ringgit current liability, Shangri-La Hotel has RM5 cash to settle current liabilities. Therefore, Impiana Hotel has a higher ratio to settle current liabilities than Shangri-La Hotel. The reason is Impiana Hotel has strong capabilities to pay liabilities using cash ratio, which is higher than Shangri-La Hotel. Then, account receivable as percentage of sales revenue. The formula is average account receivable divide sales revenue. For every RM1 ringgit sales revenue, Shangri-La has RM6 ringgit 4 credit sales. Meanwhile, for every RM1 ringgit sales revenue, Impiana Hotel has RM67 ringgit 92 credit sales. Then Shangri-La Hotel has a good outcome for their sales revenue to collect from that compared to Impiana Hotel. The reason is Shangri-La would be better for generating cash from account receivable, which is higher than Impiana Hotel. Next, account receivable turnover. The formula is sales revenue divide average account receivable. From the total sales revenue, Impiana Hotel is able to collect its debt every 1.4 times, and from the total sales revenue, Shangri-La Hotel is able to collect its debts every 30.8 times. It means that Impiana Hotel has a better for account receivable turnover to pay their debt quickly compared to Shangri-La Hotel. It is because Impiana Hotel indicates that a company is able to collect its debts in a short-term period rather than Shangri-La Hotel. The last one is average collection period. The formula is 365 days divide receivable turnover. Shangri-La Hotel require 26 days gap to collect its debt in credit sales. Meanwhile, Impiana Hotel took 260 days gaps to collect its debt in credit sales. It shows that Shangri-La has a good potential to collect from account receivable in a short-term day compared to Impiana Hotel. The reason is Shangri-La has a short term to receive cash from account receivable since it is only 26 days, which may drive the potential customer to pay.
Thank you to Ansha Shamimi. I will continue the presentation by covering the next ratio, but before I explain more further about this ratio, let me introduce myself first. I am Nurul Adila binti Kadari Zaman, and I am the third presenter that will be discuss about profitability ratio of Shangri-La Hotel and Impiana Hotel. For your information, our group will be discovered on issue of net profit decline to recovery outbreak. as per Ansha Shamim mentioned before on previous slides. By using this ratio, we can see the difference of firms' performance between these two companies. But in general, the ability of the business to produce net income from sales and available asset is measured by the profitability ratio. As we know that this ratio consists 5 elements in it, and as the first one is revenue ratio. The ability of the company to produce net income from sales activities is measured by this ratio. The formula for this ratio is net income divided sales revenue. Additionally, this ratio suggests that the business has the potential to cut costs whenever possible in order to increase revenue. Next, we can see the applications of revenue ratios towards Shangri-La Hotel and Impiana Hotel. According to the graph, we can see that Shangri-La Hotel experienced greater ability in generating net income compared to Impiana Hotels, which is Shangri-La Hotel produced 62.86%, while Impiana Hotel produced negative 55.03%. Next, the second element is a return on assets. This ratio assesses the firm's capacity to produce net income using its existing resources. The formula for this ratio is net income divided with average total assets. Moving on to the next is the application of return on assets. We can see that Impiana Hotel has a better performance compared to Shangri-La Hotels because Impiana Hotel produced a negative 5.38%, while Shangri-La Hotel produced a negative 11.87%. This is because this ratio, the greater the ratio, the better the company's ability to produce net income from total assets. Furthermore, moving on to the third element, which is assets turnover ratio. This ratio assesses the company's ability to generate sales revenue from its available resources. The higher the ratio, the greater the company's ability to generate sales revenue from total assets. Basically, we can see the applications by referring to the graph. We can see that Shangri-La possesses an extraordinary assets turnover ratio for the year 2020, which is 0.12 compared to Impiana Hotels that produce only 0.09. On the other hand, profitability ratio also consists return on investment. This ratio is very essential during the first year of operation to assess the return on investment made in the business. This ratio also assesses the company's ability to create net income from the capital invested in the firm. According to the diagram, the Impiana Hotel is expected to offer a higher return on investment percentage for the year 2020 in comparison to the Shangri-La Hotel, which anticipate a return on investment percentage of negative 58.63%. The Impiana Hotel has attracted a bigger number of investors compared to Shangri-La Hotel, which is negative 26.54%. Lastly is return on equity. This ratio is usually advantageous to the publicly traded corporation that issues capital in the form of shares. This ratio assesses the company's ability to create net income from the capital invested by the owners or shareholders. Formula to calculate this ratio is net income divided with total equity. By referring to the illustration given, we can see that the return on equity generated by the Shangri-La Hotel in 2020 is negative 16.32% to be a greater percentage compared to Impiana Hotel, which is the hotel only produced negative 28.20%. I think that's all from me. I will pass to the next person.
Hi, my name is Umi Rahayu Minta Azman and I'm the last presenter. We are moving to the next ratio, which is debt ratio. The term debt ratio refers to a financial ratio that measures the extent of a company's leverage. The debt ratio is defined as the ratio of a total debt to total asset. Expressed as a decimal or percentage, it can be interpreted as the proportion of a company's assets that are financed by debt. Debt ratio consists three elements, which is the first one is total asset to total liabilities ratio. By looking at the graph, for every RM1 liabilities, the Shangri-La Hotel has 10.28 assets to settle the debts of the company. Meanwhile, for every RM1 liabilities, Impiana Hotel has 8.42 assets to settle the debts of the company. So, Shangri-La Hotel has a better capability, which is 10.28 cents to pay the debt compared to the Impiana Hotel, which is 8.42 cents. Second element in debt ratio is total liabilities to total assets ratio. By looking at graph, for every RM1 asset, Shangri-La Hotel required 0.10 cent liabilities to run its operation. Meanwhile, for every RM1 assets, Impiana Hotel required 0.12 liabilities to run its operation. So the comparison shows that Impiana Hotel performance is better than Shangri-La Hotel, which is Impiana has 0.12 cent compared to Shangri-La, which is slightly lower, 0.10 cents. Third element in debt ratio is debt to equity ratio. By looking at graph, for every RM1 equity, the Shangri-La Hotel required 0.11 cents liabilities to run its operation. Meanwhile, for every RM1 equity, the Impiana Hotel required 0.13 liabilities to run its operation. So, for the performance, the comparison shows that Shangri-La Hotel has better performance to attract the investor to invest in the company compared to Impiana Hotel. So for the conclusion, Shangri-La Hotel having more distinctive features and innovative marketing that draw tourists in. Even though Shangri-La Hotels advertise higher rate for their room, which is 560 ringgit per night, compared to Impiana Hotel's nightly rate, which is 252 ringgit. Because of its superior performance, the Shangri-La Hotel has achieved greater popularity than the Impiana Hotel. COVID-19 outbreak has negatively impacted the operation of numerous enterprises. So we can conclude here, Shangri-La Hotel has performed better than Impiana Hotels. Therefore, we anticipate that the two hotels will continue to operate profitably despite the numerous strategies employed.